The Financial Inclusion Commission was established in recognition of the fact that while Britain prides itself on being a global leader in financial services, too many of our citizens are excluded from access to those services, the sort of services that you need to build a better life for yourself and your family, access to a basic bank account or to insurance. And so we brought together a group of parliamentarians across the political spectrum, a group of experts led by Sir Sharad Cooper-Coles, the former ambassador, to be able to give a really sharp focus to recommendations, drawing on evidence from those directly affected and from experts around the country.
On the panel we have quite a strong view that actually the way to address this is from a consumer needs and behaviour perspective rather than from a product perspective. People use financial products in different ways for different reasons, and it's that combination of people's behaviour and different product features that can cause problems. So I think you have to be able to look at the product offering in the context of what people need to use it for and how their behaviour is likely to change while they're using it.
The evidence we've been giving today has been all about what we understand to be the real issues for customers at risk of exclusion and what we as a bank can do to help them. So the work we've been doing, for example, with credit unions to support them to help customers, rolling out with our own staff more knowledge, working with organisations like the Citizens Advice Bureau, Money Advice Service, and making sure that the customers that we serve, about 2 million or so active basic bank account customers, have all the products that they need and the access to those products through the Link ATM network for free, for example, and across the counters in our branches.
A huge amount has changed over the last little while. So obviously we've had the credit crunch. We've seen the profile of people in debt change quite significantly. So whereas it used to be people coming to us saying that they had taken out some credit and now they were struggling to pay it back, now it's much more about people saying we simply cannot manage. Our income is flat, our expenditure is rising, and we're struggling to meet the gap.
One of the aspects of the Commission's work that I think has been very valuable is that we've not been as London-centric as some policy initiatives are. We've got out on the road and gone to see people in areas where financial exclusion is really much more prevalent than anybody would like, in places like Liverpool, Cardiff and Glasgow. So I think we've got a good view, not just a policymaker's view of the things that need to be done about financial exclusion.
What we think is needed in the affordable credit space is somebody, a bank, supported by government, financial institution, who is not going to be last in, first out, but is going to be first in, last out, in terms of raising the finance that alternative credit suppliers in the not-for-profit area need to scale up their business and provide more loans for more people who will continue to need them.
Well, lots of what I was talking about was about the lived experience of communities that operate below the radar, many of them that live around a cash economy and don't feel that they are part of society, so they don't feel that they have a belonging in terms of having bank accounts or a form of ID. So they don't access credit or loans in the same way that you and I may do. It's a very emotive way of living, and it's very month to month rather than any long-term plans.
Well, financial inclusion and welfare reform meet because there are three big drivers. So there's less money in the system. The LGA has estimated that 11.8 billion are being taken out of the welfare system by 2015-16. But there's also within the reforms, especially universal credit, a transfer of responsibility to claimants to manage their own financial affairs in new ways. And there's a transfer of responsibility to local councils working together with their voluntary sector and private sectors and residents to develop ways of supporting people who are financially excluded and need that extra support.
We've only recently seen, I think, financial inclusion rise up the political agenda, and I think that's mostly to do with the fact that people are struggling. But what I'd like to see is a sustained interest in this agenda, not just when times are bad. This is a core life skill after all, and we need to see for years to come financial education and inclusion as a key part of everything that we do.
So the challenge we have in the UK is about 10.5 million adults, so nearly 20% of the adult population, don't have sufficient digital skills to participate in mainstream society, and that's by their own admission, so nearly 20% of the population. And what we're trying to do is we're trying to find practical solutions to bring that number down.
The way that we tend to see financial inclusion and the breadth of that is that we have to reach not only that group of people, the 1/3 of all families who have no savings whatsoever, but also that group of families just above that level, typically in terms of income, for whom savings are perhaps enough to live for a couple of weeks before they run out of money. They need to be more included in our system.
In the future, I'd like to see something implemented in schools where children and young people would be taught about how to manage their finances properly, instead of just being told, oh, you can go to a payday lender, somewhere where your money can be properly managed and budgeted by yourself.
Well, we estimate there are about 3 million households at the moment who are in severe crisis point debt. But beyond that, there's a trail. Think of there being a slope. At the top end, there's about 20 million who are juggling their finances to try and make ends meet. Then you've got 15 million who are showing at least one sign of financial distress. What policymakers need to start doing is focusing much more up the slope. By the time people have got to that point of crisis debt, we know that 78% of them will be so stressed that they won't be sleeping properly. 2% will tell us that they've given their job up or had to give their job up because they were so ill because of the stress of debts. 7% of them, their relationships would have broken down. Children in households that are indebted say they're twice as likely to be bullied than children in non-indebted households. So in that process, as people are sliding down that slope, the pressure and the detriment on them is really building. So the real challenge is how do we get to people earlier and stop that before it starts.
Financial inclusion is about maximising the number of people, the number of businesses that are part of the mainstream financial system. It's rather as though we're trying to make sure that everyone in society, just as they benefit from the road system, just as they benefit from the health system, so they benefit from and are part of the regular financial system.